Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another jam-packed daily cryptocurrency market update. If you are finding yourself on our channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the cryptocurrency markets, but also the broader markets. And that's exactly what we're going to be doing in this video. A lot has taken place over the past 24 hours. The government of the United States has put in a request to sell, I believe, $120 million worth of Bitcoin. We are going to be looking at that. We know the government, the US government, is one of the largest holders of Bitcoin due to seizures, certainly seizures of the likes of Silk Road. And I think this particular request is to do with the funds seized from Silk Road. And then we've got a hell of a lot to cover. Yesterday was also the largest day in outflows in regards to the Bitcoin ETFs. Now, we know Grayscale has been the leader on this crusade. However, the interesting thing is when you look at Bitcoin, not only were we expecting resistance to act exactly as resistance from a technical level, so the charts signaled all the fundamental news, and we were very much expecting this. Despite that, I think Bitcoin has done rather well. And even in the face of the US government dumping 120 million Bitcoin, it's still doing well. And that right shoulder may indeed be completed. It's too early to say. However, if we do get that completion of the inverse head and shoulders pattern, just like the one we had earlier in 2023 that predicted 42K, we may be looking at 150 something K Bitcoin, which is very much in line with our macro thesis of everything. Then we are going to be looking at CBDCs. Yesterday, there was a report from the International Monetary Fund, that essentially came out and said and revealed where a lot of the countries around the world are in regards to CBDCs. And they also talk about the crossover between CBDCs and AI. CBDCs are a force for control, ladies and gentlemen, and we are going to be looking at that. And then we're going to be diving over to the charts and talking about a little bit of macroeconomic data. Also, BlackRock is hosting a webinar today on Bitcoin and the access that they've now made easy to it for their investors. Remember, 70% of wealth in the United States is held by people 60 years and older. And then we're going to be looking at GDP, which also kind of backs up how we thought the economy was going to go last year. And this year, we had very strong growth in regards to GDP. No recession here just yet. There's a lot of I've really fallen out of love with macro economists. You know, these people on Twitter, these people on YouTube, typically don't actually know what they're talking about because they're following headlines, not the charts. And this is where we differ as a channel and why I think it's important for you guys to subscribe, because we are technically driven in our analysis of the markets, not news flows and sort of fear driven, if you will. And that's how we made a distinction between the rest of the pack last year and actually got back into crypto when Bitcoin was around about 15, 16K. And we've done very well as a result of it. And last year was a sensational year. And if you guys want to find out what we bought and check out our portfolio, do consider becoming a Patreon. But I digress. Let's dive into it all, guys. Let's start things off with, of course, what came out yesterday. Breaking US to sell $130 million worth of Bitcoin from the Silk Road seizures. Now, Silk Road was actually how I got introduced to Bitcoin. I don't talk about it a lot, but that was the first time I ever got introduced to Bitcoin. And we are planning on doing a more personal podcast where we talk about all these really interesting things as they relate to crypto. So do stay tuned for that. Of course, we dropped a podcast yesterday with somebody, a computer scientist, who also helped build parts of the UK stock market. Very interesting. But the US government is a larger holder of Bitcoin than MicroStrategy, and they've accrued this Bitcoin via seizures, and they put in yesterday a notice that was given essentially to sell $129 million worth of Bitcoin. And despite this looming threat, Bitcoin's actually doing rather well. And I want to talk about the charts a little bit later on. So that was certainly some interesting news that came out of yesterday. Is this going to affect the price? Well, there's a number of variables that come into this. For example, are they going to dump on the open market, or are they going to do an over-the-counter trade with the likes of Coinbase? I think that's a lot more likely. When you're selling that sort of volume of Bitcoin, you want to get the most out of it, and an over-the-counter trade is the best way for that to happen. It's just like with Grayscale and all the kind of outflows that we saw in regards to the ETFs, and we'll move on to that now. You know, yesterday was the largest net outflows in the 9 days of trading of the Bitcoin ETFs thus far. And of course, Grayscale were the leaders of this. Now we know why Grayscale are selling. Of course, you had the arbitrage discount trade with their trust that became an ETF. And of course, you've got the bankruptcy treasury in regards to FTX. Again, the really interesting thing that I want to highlight once more is just how well Bitcoin has held up. So all of this was technically signaled. Everything that the news headlines have been covering has all been technically signaled. And that gives us a degree of confidence. When you're right, like we've been on the markets for as long as we have, the markets are basically saying, yeah, you're on the right track. You're on the right trail. And we do think, until there's reason to suspect that we're not, that things are going to play out in the manner that we have suggested. Also, in regards to ETFs and things like this, BlackRock today, so this came out yesterday, are hosting a webinar tomorrow to educate their clients on Bitcoin. This is bullish across the board. And we were always going to get that buy the rumor, sell the news event in the actual approval of an ETF and the trading of it. Remember, importantly, all technically signaled. We champion technical analysis. You will outperform your peers if you can understand how to read the charts. And we teach a very easy thing called stage analysis. You don't need to learn it from me. You can learn it from the likes of Stan Weinstein, who fathered the method back in, I think, 1990 or something like that. And it's still as applicable as it was then, today, perhaps if not more so. And it essentially breaks the market down into 4 stages. And again, we do teach that in the Patreon. Before we dive into the charts in a lot more detail, and we look at things kind of across the board, the dollar had a bit of strength yesterday, but the dollar, we do think, is in a broader downtrend, and we've got not only a technical reason to suggest this, we also have the fundamentals that also support it in regards to rates, where they're going, the forecast, so on and so forth. So, you know, the dollar was a little bit strong yesterday, but it's sort of rolling over today. I am back now doing a little bit more trading in regards to, I'm not a day trader. I don't think the vast majority of you listening to this video should even bother trading. I think most people shouldn't bother trading. I think they should stick to investing. Trading, you are likely to lose money. But what I want to do now is dive over to this clip that came out yesterday in regards to CBDCs. We'll talk about that a little bit, and then we'll close things off on some technical and kind of macroeconomic stuff. So let's dive over to that now.
Countries exploring the use of central bank digital currencies, or CBDCs, can now access a virtual guide by the International Monetary Fund. The guide will cover areas like interoperability, financial inclusion, and how to onboard businesses.
We took the pulse, how many countries are engaging with CBDCs. Over 110 of our members are at some stage of engagement, some quite advanced, some still at the point of exploration.
The guide was launched at an anniversary event of IMF's Regional Training Center. The center provides government officials with training on economic and financial issues. Singapore's central bank chief, Ravi Menon, also spoke at the event. There, he outlined risks in today's world and how the center plays a key role in helping member countries with capacity development.
Geoeconomic fragmentation, climate change and nature loss, and technological disruption, especially with the advent of artificial intelligence. These are multifaceted issues that require mobilizing and harnessing cross-disciplinary knowledge and expertise. It's no longer purely in the realm of economics.
Boom, very, very scary. You know, he mentions that money is no longer perhaps just in the realms of economics. It's now got a technological element to it. And of course it does. And this is one reason we've been so sure on crypto for a long time, because it actually suits their agenda. You know, having this transparent ledger. We're going to be releasing a video on the metaverse. Now, most people think the metaverse is a game, and that's how it's been presented to us in regards to crypto. The metaverse is not a game. The metaverse is a digital version of real life, the Internet of Things, where they can track and trace everything. They'll give you your own carbon footprint. They'll tell you you are eating a little bit too much meat, or you may be driving a little bit too much, you're doing too much footsteps, or maybe you're, who knows how far it's going to go. I don't want to go down that rabbit hole, but they talk about the kind of AI convergence of CBDCs and AI, and this is why we're so interested in decentralized AI systems. I think it's 10 million iPhones. If you gave that computing power to training an AI model, you could almost compete with the AI systems that are out there in regards to generative AI. You could train it very fast, and this is stuff we're really looking into, so do stay tuned for videos on that. But it's quite scary, the implementation of CBDCs, and they are absolutely coming. There's a blockchain and a distributed ledger element to it, but it's not in the kind of traditional Satoshi's vision. And the really interesting question, I guess, that's raised from this is, are they going to allow Bitcoin to survive during this? Bitcoin maximalist, it's like Michael Saylor's argument of how many chairs are you sitting on? Well, actually, you sit on probably multiple things throughout the day. Certainly, he probably does. So the Bitcoin maximalists on this kind of idea, I'm not convinced that they would have allowed Bitcoin to get as far as it has with it being a real threat to them. And the origins behind Bitcoin, I think, are questionable, to say the least. They're also wrong on the fact that Bitcoin is the only reason or the only application for a distributed ledger. It was Hal Finney himself who said Bitcoin is a global ledger. There's many applications for this. Let's now dive over to the charts. So you guys know the plan. We fill you in on it daily. It doesn't deviate regardless of what the news flows are. Subscribe to this channel, ladies and gentlemen. Stop listening to these, I'm going to try and not use a harsh word here, but other channels that are just news driven and everything centered around the news. No, you want to have a plan. You want to have reasoning for that plan. One reason that human beings are the apex in the world is because of our ability to critically think about things. You should apply that to markets, and you should use that gift of God that you've been given to the markets just like you should anything else. And I think one reason we've got so many problems in the world is because of this lack of this. So it's not just Bitcoin that ran into resistance against the dollar chart. It was also Bitcoin that ran into resistance against the likes of the SPY. This may now be turning around. Remember, we don't want to run any of these left shoulders. You're now at that potential turning point. SPY's been very strong whilst Bitcoin's been weak. However, you are now at a stage where the dollar is also turning. Remember, we didn't want the dollar to run this 0.14 level. I don't think it will. I think this is a bit of a doji. And I think it's in a broader trend or a broader channel that we've been in since we entered an official communism when the government basically stepped in and took over banking via bailing everyone out. And really, there was a massive shift in 2008 onwards that hasn't quite been explored, I don't think. But we are expecting the dollar to come down. Remember, we've got a fundamental reason for this in regards to, where's the Fed funds? There he is, in a nice bloody Bitcoin orange. Typically, when the Fed funds is coming down or signal come down, the dollar will go with it. And also, we've shown the correlation between, let's do Bitcoin and the SPY. Dollar strength, typically Bitcoin weakness, certainly been gold weakness. However, we do expect the SPY to go higher. We expect Bitcoin to go higher. We expect gold to go higher. We expect the NASDAQ to go higher. Remember how right we've got these markets. Let's move these off. So this is our NASDAQ chart, target hit, Microsoft. And the beautiful thing is Bitcoin is in an uptrend against these. So you also have the CME gap closed. So the right shoulder actually could be in my opinion. Once you break this neckline, it really is full send. The next level you're going to run into is all-time highs. Once you break that, we are now potentially venturing into new all-time high territory. Also, to kind of get rid of some of the fear and the idiocracy, I think, in the markets, US GDP came out yesterday, and it was a blistering 3.3. So this is really good GDP stats, no recession in sight. Yes, okay, when you really analyze this, you could say a lot of this has to do with credit, not only government credit and spending, but also consumer, which has gone through the roof, and it's kind of propping things up. And there is going to be an almighty hangover that comes as a result of this. However, we don't think it's until 2025, which fits in with our thesis on the markets more broadly. So that's really all I've got for you guys. I hope you've enjoyed this video as much as I've enjoyed delivering it to you guys. Remember, check out that subscribe button. If you're not already a Patreon, do consider it. It's £30 a month. And for the information you get 8 weekly meetings with me as a group. You also get to join a community of like-minded individuals, birds of a feather flock together, and we really are showing results. We're very transparent, and we hope you take that journey with us. But on that note, I'm going to love and leave you. Remember, you don't have to. All the stuff that we put on here we think is very helpful and will help you in your crypto journey. On that note, I'm going to love and leave you. Thanks for watching, guys. I'll catch you all in the next one.